I understand that not everyone has enough money to deposit in their broker. We always start with small accounts. I've been there. I've been trading small accounts up until I grew that particular account. However, the biggest question is, how do you grow a small trading account? It comes down to several things. The first one is a trading strategy that gives you enough frequency, and by frequency it's basically the number of trades that you can get, so that you can get into the market and close, so that the balance will be actually rising. In this particular video, I'm going to teach you a particular trading strategy which falls under the scalping category, and if you take it seriously from the start up to the end, I guarantee you to see results. Of course, there are some parameters that I cannot change on your side, which includes patience, discipline to follow the rules that I'll give you, as well as your general trading psychology. Without further ado, let's jump right into the video. Alright, so the strategy that I'm going to show you is basically under the scalping strategies. If you are serious about changing your life, or if I can say growing a small account, then watch this particular video maybe twice so that you really comprehend what I want to put forward. Alright, so basically we are going to be utilizing the M15 time frame. That's the first thing that we need to write down, is on the M15 time frame, and we can apply this particular strategy on any tradable asset that we can get. All right, so basically if we look at this particular tradable asset, which is Australian dollar against NZD, we are to find entries in points such as these, right? So this is where we want to make our entries to the upside after such a flow. Another point we can see, after such a flow, we want to make our entry somewhere at this particular point to the upside. So the scalping is basically whereby we enter the market and then exit. All that we want to get is this particular move to the upside. However, if we look at this particular illustration, we can see that it's actually subjective. How do we determine entries at these choppy phases, right? So to remove that subjectivity, I'm going to incorporate indicators that are going to give us rules of market entry, what we need to see first before we react, right? So the indicators that we are going to require are basically the 5 EMA, the 13, the 50, and the 200, right? We're not going to require this one. It's basically a saved template, so we're not going to require the TDI as well as this one. We are going to require only these EMAs, right? So within these EMAs, what do we need to see, right? So the M15 time frame creates what we call cycles. So these cycles basically gives an ending of flow and then a restart of another cycle. That is now something that I discuss, or I go deeper in my in my mentorship. All right, so in this case, we can see that we had this 1350 EMA cross on this M15 time frame. The 1350 EMA cross, the 50 in blue and the 13 in red, are basically EMAs that are giving us trend direction. So this crossover to the downside is telling us that the trend is in a downward move. And what we want to do is to oppose that particular trend. If the 1350 are going to the downside, we expect to get a buy when the trend has given us the opportunity. How does that come up? So in this case, we have the 1350, the trend is downward. After that, we can see there was a 513 EMA cross, right? After the trend, you can see 1350, then 5 in yellow and 13 in red being issued like that, and then a drop, right? Then we can see another 5 EMA crossing the 13 EMA at this particular point, then a drop. So if we look at these things, we can see that there was a 1350, 513, 513, and giving us 3 flows like 1, 2, and then 3, basically like this. And then at the end of the third floor, that is where we want to make an entry by finding a candle that closes above the 13 EMA. So the candle in this case that closed above is this one. It was a bullish candle, actually closing above this red EMA, and this is where we were going to make our entry like that, and our stop loss right below the structure. Our target is on the 200 EMA. That is the use of the 200 EMA. So we've said it's 1 1350 EMA cross, 2 513 EMA cross, 513 EMA cross, candle closure above the 13 EMA, and we get into the market. Stop loss below structure, target is the 200 EMA, basically like that. So let's have more examples so that we fully understand how this comes into play, right? So here we can see as well the perfect thing that we want to see. We can see there was this 1350 EMA cross. Then after that we had a 513 here, and after that we had another 513 here, and next we want a candle closure above the 13, which occurred at this particular point, which is this one. So candle closure above the 13 gave us an entry and our exit at the 200. When the price touches the 200, we know that it's time to exit the markets, basically like that. So that is how we will be trading with this particular scalping strategy. It's simple. As I always love, simplicity is the ultimate sophistication. That is what I do in my trading. I don't like complicated stuff. I love the simple stuff. It's the 1850 EMA cross of the 513, cross of the 513, candle closure above the 13 EMA. We enter the market and we exit at the 200 EMA, basically like that. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.